the metal's not there to purchase. And I think what you'll see is LME and COMEX at some point in time have a problem.
Well, hello there, my friends. Chris Marcus here with you for Arcadia Economics, and we are continuing our rebroadcast of the panels from SilverFest this past weekend. And coming up today is a roundtable with Bill Holter, Peter Krauth, and Rob Kientz, where we talked about what to expect in the silver market going forward in the next year. Certainly a lot has happened this year, which we touched on a bit as well, but really the focus was what these guys see coming next year and what there is to look forward to. So with that said, here is the 2023 forecast for the silver market.
Thanks for joining in with us today. Great to see so many familiar faces out there in the audience, and also some familiar faces joining us here to talk about the silver outlook for 2023. I'm joined by Peter Krauth from Silver Stock Investor and author of the great book, The Great Silver Bull, which I've sure enjoyed reading. A lot of great history as well as tips going forward. So Peter, welcome on in. How are you today, my friend?
I'm great. Thanks for having me here, Chris. Pleasure to be joining your group.
Well, it's great to have you back for SilverFest, and they're one of the leading figures out there in helping to unravel these markets, which get a little confusing at times, but good to see you again. And fortunately, joined by another longtime expert, one of the most well-known voices in the gold and silver space is Bill Holter. Bill, it sure is a pleasure to have you here, and thanks for joining us. How's everything going with you today?
Yeah, it cut out for a second. Thanks for having me, Chris.
Okay, well, it's great to have you here. And my dear friend, Rob Kientz, great to have you back at SilverFest once again, and thanks for checking in. How is everything going over there, my friend?
Everything's going well. Great weather here, so I can't complain. And of course, it's fall, it's football, and it's SilverFest. So you can't go wrong.
Well, glad to have all of you guys on here to join us. Obviously, it has been a volatile year in the silver market. Just to start us off, before we get to 2023, we'll take a look at what happened here in 2022. We saw silver had been trading in a range from about $22 to $29, doesn't seem to get over 30 for various reasons yet. Earlier this year, getting clobbered right in around March when it had been over $26. Federal Reserve kicks in with interest rate hikes, which has a lot of the paper folks selling. But with all of that said, seems like the Fed, at least we're seeing the light at the end of the tunnel. And we have seen this rally of $3.50 right before we started. Peter and I, we were looking at the chart, seeing that's happened since October 14th. So perhaps things changing. I wonder if maybe we have seen the bottom. And Bill, why don't we start with you before getting to 2023? What are your thoughts on what we've seen throughout this past year?
Well, to me, the most important thing is the physical market. At this point, I mean, you're talking about paper silver. And at this point, I don't think you can find any silver under $25, $26. So we are getting a big divergence between paper and physical metal. I mean, even 100-ounce bars, you're looking at $4 over spot. You're almost $26. Junk is over 30. Eagles are well over $35. So if you're watching the paper markets, if you're watching the paper chart, just remember there's a big divergence between what they're telling you silver is and what the real cost is to get it in your hands.
Well, that has been the case. And Rob, you and I have talked about that quite a bit. Again, we've seen those increased premiums. Do you see anything changing with that? Or what are your thoughts on that divergence we've seen between the paper and physical?
Yeah, right now the derivative markets aren't really pricing in supply shortages in silver. I think everybody thinks that we do have supply shortages when you look at, the flows from the main exchanges and, short of somebody else having a big stockpile of it. It looks as though we're getting to a point in which people will begin to take notice. They haven't really yet though. So, and I think for silver specifically, because it's such a commoditized metal now, and it's probably a little bit less thought of by the mainstream financial advisors and investors as money, they're probably not, they're not going to get into investment the same way we do. However, if the silver shortage story begins to take off and you see it in the mainstream media, I do believe you're going to have all those journalists come in bidding it up. And they're also going to do it in the derivative markets. And that's the thing about the derivative markets, you know, up until the point at which we figure out we need to have higher prices, you can have whatever price you want, and it may not be reflective of reality. But once the general market wakes up to that, and you can see it in the positioning on the Commitment of Traders report, the managed money now is going short silver while the bullion banks are going long. So the managed money basically represents the public or people that are banking with or doing finance with some of these big financial houses. Them being short silver tells you that the average investor is not aware of what's going on, but they will when that first report of a lack of silver comes out. And we've had that a little bit with the American Eagles, but I mean on a bigger scale, such as a company cannot get silver to produce iPhones or something like that, then I think you would see it enter the public consciousness. And then I think at that point the derivatives traders would be forced to go, you know, where the winds are blowing, which would be long.
Yeah, it seems like perhaps just a matter of time before we see that change on a bigger level. Peter, I know you've been looking at this as well, and what do you think about what we've seen in this past year, where it seems like, you know, you have a lot of funds selling, yet there is that divergence, and is it just a matter of some point reaching a break point, or what are your thoughts on what we've seen in the past couple of months?
So I do track ETF holdings pretty closely, and what I've noticed in the past sort of month or two that holdings, and this is the first time almost since, I'm going to say about 2006, since the silver ETFs exist. There's always the question of the reliability of some of these statistics, but in any case, the numbers that I see, and I follow them at least for trends, is that silver holdings in ETFs are starting to come off. This is something that you typically don't see or rarely see. We've had multiple times in the last, say, 16 years or so, big price corrections, and the holdings in silver ETFs would either not budge, move up, or only come off slightly. So they've been very stable or they've moved up. And now we're starting to see some more obvious drawdowns, and I can't help but ask myself if these are bigger players who are taking physical possession by redeeming their ETF holdings. So that's one thing. On Bill's point about the premiums, I don't see that changing anytime soon. I've been following this for a long time. You know, we were already at above average premiums, if my memory serves me right, going into 2020. They got much worse, backed off a little bit, and in the last sort of 6 to 12 months have gone up again. The U.S. Mint is producing half of the Eagles, if I've got that right, that they would normally produce. That's just going to make things worse. I'm not going to comment on why, but that's apparently what's happening. And I think that the price is depressed. Again, the reasons are all up for debate, but they are depressed. They're still pretty close to an all-in sustaining cost, and demand is growing much faster than supply. So forecasts for deficits on an annual basis, I think, will continue. And it all looks great for silver, and silver is just one of those assets that when it'll be almost quote unquote dormant for the longest time, and then when it explodes and people kind of discover it, it goes crazy. And we've seen that happen multiple times. I don't expect the reaction this time will be necessarily all that different. If anything, we know there's a lot of industrial demand, and that keeps growing. I always say that I think that industrial demand will help create a rising floor under the silver price, and then it's going to be the investment demand. It's going to, periodically kick in and just push it up wildly. So those are kind of my thoughts in terms of what we've seen, and over the past, say, year or even a bit longer.
Yeah, that makes a lot of sense, because I know for a long time, a lot of us had looked at it where the industrial had stayed relatively constant, and if you get a big surge in the investment demand, that has been what we thought would drive the price. Although interesting now where we're seeing industrial growing as well. At the same time, it seems to me that perhaps there's more interest on silver. You know, I do the show talking about silver. There's Wall Street Silver, a lot of other people that are out there. Bill, do you remember ever seeing as much interest or just attention on silver as we have now? Obviously, you've been doing this for a while, but is that a difference to you that there's more people aware of what's going on and talking about this, which has led to more people to buy silver? What would you say about that?
Yeah, there's definitely more interest at this point. I will say that back in 2010, 2011, you did see a great deal of interest, but I think there's more people now that are waking up, orders coming in time after time. I'm hearing from people, I want to do the trade today and I want to pay you today. I want my money out of the bank today. There is a sense of urgency now that I've not seen before.
Yeah, and Bill, I know you had a rather large customer earlier this year who was pretty well endowed and placed a $50 million silver order, potentially doing more. For people who have, I think a lot of people have heard about that, but anything you could comment on there in terms of just the mindset of why now she was thinking about doing that? And also we did have some questions if there ever has been a follow-on order, which I know you had mentioned earlier this year there was the possibility of.
I'm not at liberty to talk about any follow-on order or orders. I will tell you that her mindset was exactly as I just mentioned. I want to do it. I want to get it. What surprised me the most when we were trying to fill that order is that between junk and Eagles, there was only $27 million that we could fill. We cleaned up every silver Eagle. We bought future allocations. We bought every bag of junk, every $50, every silver dollar that we could get our hands on. And to me, it was shocking because $27 million it's nothing in today's world, but it actually cleaned up all of the available U.S. mint silver that was available at that time. And from that point forward, you've seen premiums on Eagles and junk do nothing but go straight up.
So, Bill, I'm assuming that you don't think there's going to be an easy reverse in that situation. I know that you've talked quite a bit about how a lot of things in the financial markets are getting rocky. Do you think 2023 is when we finally see some sort of break and really an acceleration, whether it's just between the paper and physical price, in terms of what you've been writing and speaking about for so long, do you think we finally see that in the silver market in 2023?
I think we've got to get to 2023 first. Just from the standpoint of derivatives alone, look at what's happened to interest rates. Every single derivative that's ever been written has an interest rate assumption in it. As rates rise, that changes the assumptions, it changes and creates margin calls. So I think first, the supplies are already so tight, and you can, even if you're not on the inside of the precious metals business, all you have to do is look at the premiums. And the premiums tell you that silver is extremely tight. I mean, at this point, you've got 100-ounce bars with bigger premiums than what Eagles used to have. So the amount of physical product available has been shrinking continually. Then I did the big order, and I think that woke some people up because, like I said, just from the standpoint of premiums, the metal's not there. The metal's not there to purchase, and I think what you'll see is LME and COMEX at some point in time have a problem. But again, from the derivative standpoint, I don't know. What all there needs to be is one. And you could go back to March, look at the nickel market. All you have to have is a market like what happened in nickel happen now, and you will get domino effects across the board in derivatives. I mean, the whole system is shaky. You may have already seen the event with FTX. That's even possible because there's all kinds of derivatives in and around that situation.
Yeah, it seems like we're seeing a lot of things like that spark up. Perhaps that's been one of the themes of 2022, which not entirely surprising. I think that's why so many of us talked about, all right, things are going to be great or seem great when you have 0% interest rates and cash being shot out of a cannon all over the place. Yet perhaps not to say it's directly connected, but not surprising that you see something like that with FTX in the current environment. Rob, with all of that said, I know, again, you've been tracking this all closely. And what do you see going into 2023? Any reversal or easing of some of these conditions in the silver market? Or what are you expecting over the next year?
Well, I think you have to start with the Fed, because what the Fed does seems to determine what everybody else does in the market. Meaning, if the Fed continues to hike rates and we continue to have this downward slope in the rest of the markets and they sell off, I do think that you're going to have interest coming more strongly into gold and silver. I don't think it'll be a big pop scenario until you see something break. So for me, the next big leg of the bull market in either gold or silver is going to come when something breaks. It's going to be a geopolitical event, a war, a bank failure, something major that affects the dollar, something along those lines. Until then, I do think that you'll see renewed interest. I think for silver, the story is going to be, do they have enough stocks? Do they have enough stocks basically to handle demand as you go forward? Does that break in 2023? And does the market come back and say, okay, you really do have a shortage now, maybe it's a time for us to look at silver as an investment. And then you start getting those passive flows in SLB and some of the other funds. So we'll see, if that does happen. But I think the big story, we're just waiting on something to break financially before you're going to get the big pop.
All right. And Peter, the next question for you. Do you see the Fed still hiking rates throughout perhaps early 2023? What are your expectations in terms of what they'll be doing? Do we get a pause? Do you think that they make it out of 2023 without cutting interest rates? Obviously, a lot of us, I think earlier in the year, there was a large percentage of the community that thought, all right, they'll be cutting at some point this year. Obviously, hasn't happened. And while I wouldn't say it's impossible in 2022, like Bill pointed out, perhaps without some sort of overt crisis on a larger scale. But looking into 2023, what do you see the Fed doing and that whole trajectory playing out?
Yeah, so we actually chatted about this a couple of minutes before going live, and I think that we are obviously, as you say, these things can change and they can change quickly, and subject to all sorts of unexpected events and news flow, etc. But given the current outlook, I guess I'd have to say probably 50 basis points in December. The next meeting after that, probably another 50 basis points. From there, really hard to say, but I do think that a pause by the spring or the summer is more than likely, and that could last for a quarter or two. And if it would surprise me that by this time next year or even slightly earlier, that we're not going to see them start to back off a little bit, because I do think that I say with some reservation that the general markets could do well, and they could. It's a third year of a presidency that historically sees stocks do really well. I know that may not be a popular opinion right now, and I say it with some reservation, but I'm just saying historically, stocks could do well. But let's keep in mind, if they do well, they might be doing well. Look at what happened this week. Inflation was below expectations. Obviously, that means the market is pricing in perhaps an earlier end to rate hikes. So if you combine that with the third year of a presidency, then you could see considerable follow through in stocks. And we've seen bond prices move up as well as yields have come off a little bit. So I don't think any of these things are mutually exclusive. We could see bonds do relatively well. We could see stocks do relatively well. But in that context, and for the same reasons, we could see precious metals do really well. And I do think that's in the cards. And again, going back to what we chatted about just before going live, I think that the markets are pricing in and are expecting at the very least a pause in the next couple of quarters by the Fed. And because of that, we've started to see stocks and bonds do well and precious metals do well. And I think that will continue again for multiple quarters going forward. And if something breaks next year, then at least initially, maybe you'll have, like we've often had, like in 2008, precious metals might sell off temporarily. People will sell what has done well, where they have liquidity, meet margin calls, and then they'll likely take off again. So that's kind of my working scenario.
Well, that sounds pretty reasonable to me, and I will pull up the current pricing on the Fed funds futures. Interesting. It looks like they're expecting the 50 basis point hike in December, getting to a range a whole 100 basis points higher at the 4.75 to 5% range. Markets pricing in a cut in November and perhaps a second cut in December. Bill, what do you say are the chances that the Fed makes it through 2023 without having to cut?
Oh, there's no doubt. This is QE to infinity. I was going to mention, after listening to Peter, the Fed has historically raised rates until they break something. The only problem now is shut down. So I don't subscribe to the theory that you're going to see I don't want to use the term long term, but I don't think that you're going to see a 3-month, 6-month, 2-year, 5-year move in the metals. I think that when something breaks, you will see markets close. This is not a cyclical event. It's a secular event, and it's a super secular event. Reason being, the dollar is going to lose reserve currency status. Now, once something breaks, because of the amount of debt in the system, where we are right now is we're right before the Lehman moment back in 2008. And what were we, 3 hours away from markets not opening? So in my opinion, I think you're going to see markets close or start to reopen. You will see reset prices that have not even been in your mind. I think things will look so different and so unrecognizable once the system does go down and then starts to come back up again.
I think that is darn well possible. And perhaps a follow-up question to that, Bill, what would you say is the lowest price of silver you could imagine in 2023 and the highest price you could imagine?
Are you talking about paper silver or physical silver?
I suppose both.
It is theoretically possible that you see a massive divide where you see physical silver at $100, $200, $500, $1,000. Who knows what the number is? You could see $1 offered, no bids, and you could see $100 bid and no offers. So I mean, that's very, in my opinion, I think it's very possible. And just think of it this way: what is the value of a contract that cannot perform? The answer is zero. So, I mean, you could see LME, you could see COMEX zeroed out, and at the same time, silver unobtainable.
Well, I hear you. And Rob, before we start taking some questions to the audience, I'll toss that same one to you. What do you see as the high and potential low of silver in 2023 in either paper or physical?
Depending on what goes on in the economy, I mean, you could see it fall. If we have another liquidity event, what happens is all derivative holders begin to sell off. So you would see a sell off in the derivative markets. You could see silver fall. Again, it has nothing to do with physical. I think all of us have harped on this a million times. Has nothing to do with anything in terms of actual supply and demand, but you could see that price go down maybe to that $11 range again. I don't think that's a long-term condition with silver. I think that's what would happen after we have some sort of banking shock or a declaration of war or something along those lines. But really, honestly, if we're just talking about normal everyday scenarios, I think as silver shortage gets closer, silver begins to rise. I don't see, going back to the Fed discussion, I don't see the Fed pivoting anytime soon. I don't think they can. I think if they tried here, it would forever break the markets. Because once you go back to easing and giving away money again and buying sovereign debt, the markets will never allow you to go back. And I think the Fed knows that. So I don't think that there's going to be a pivot anytime soon. They may hold interest rates and hold their programs. They may not sell off debt. They may not roll off their balance sheet. But I don't think that they're going to pivot and ease unless we see a major event in the economy, and that would be something that starts internationally. So for 2023, I actually think that we'll have a lot of volatility in gold and silver prices. I think we'll have a lot of volatility in the strength of the dollar on the DXY. We'll have a lot of volatility in bonds and the stock markets. I expect this year to just be volatile up and down until we start to see how the central bank's reaction this year and all the tightening that's been done. It's been criticized by the president, it's been criticized by the UN, it's been criticized by several other people. But we're going to see all this tightening around the world, how it really has affected the economies. I suspect that it's broken the economies. They're too debt laden. There's not enough corporate profit. If you go back to U.S. corporate profits, the only time the U.S. corporates made any money was right after the quote unquote restart after the pandemic. They'd been losing money as a whole dating back to 2018. The only thing that put them in the green in terms of growth was restarting from the pandemic. But we know they were starting from a lower level. They never recovered to the levels they were before. So in reality, since 2018, we haven't had earnings growth in the corporate sector in the U.S. either. So none of the underlying problems have been solved. So I anticipate the central banks are going to do what they do this year. They're going to tighten. They're going to think, okay, now we have ammunition for what's going to happen. And I think they're wrong. I think it's going to be a much deeper recession this time than we've seen in the past. But we'll have to see what happens. But I think 2023 for sure is going to be a very rocky year. I sense that people don't believe that bonds are the safe haven trade anymore. And even though the dollar is doing well relative to the other currencies, I think people understand de-dollarization and inflation and what that does to the dollar. So this time around, I think the playbook's a little bit different. I don't think that people are going to run to the dollar. They're not going to run to the bond. They may actually start running into some other currencies, and I think they'll run into gold and silver. And all you have to do is follow the central banks. They bought, I think, Q3 of this year, more gold than they bought in any quarter dating back to like 1967. And this is when the dollar was still on that gold standard. So that's a pretty astounding comment from the bankers and what they think is coming and what they're doing to solidify their balance sheets. But I think 2023 is just going to be a year of turbulence. I think you're going to see prices up and down. I think you'll see $100 moves of gold, and you'll see probably $5 and $6 moves in silver at some point. And I think it's going to shake a lot of unstable people. But I think the reasons why that market's going to move and that general instability in the economic landscape is what's going to push people into gold and silver. So I expect to see higher prices overall. But if we have, going back to what I originally said, if we have another big event, the gold and silver will sell off. The stocks will sell off. You'll see them go even lower than they are now. You'll see the spot prices, gold and silver, go down. You'll see platinum and palladium go down. You'll see a lot of commodities prices probably go down. The energy stocks will probably spike. And some other military, minerals and metals and companies will spike, but everything else will sell off. And so you could see at some point, it wouldn't surprise me to see $11 silver, at least for a few days until, rationality hits the markets again, because that's what happens. People sell their paper investments whenever, there's a crisis. But I think all of that investment will come back into gold and silver this time and stay there. And I don't necessarily think it's going to the bond and the dollar.
Yeah, I think it's a good thing that you point out there, because even in 2008, where we saw a lot of silver products similarly hard to find, we did see the price go from $21 to $9. So I think that would be a paper phenomenon. It would be interesting to see what premiums were like in that sort of environment if we did see something there. Also interesting to imagine a lot of the people, including, yeah.
I just wanted to mention, you're asking about premiums back in 2008, 2009, and then again it happened again in 2013. You could never buy silver less than $15 an ounce for real silver. So when you had $9 paper, the cheapest any silver you could buy was $15.
Yeah, and I remember the Andy Scheckman's talked about how the Eagles, when they were finally available, you had $9 spot price, and the Eagles at his cost were $18. So,
Right.
And along with the other thing Rob mentions, interesting, imagining silver up $5 up or down in a given day, which would be a bit of a roller coaster. Peter, before we take a few questions, any thoughts on what you see as the possible range for silver in the year forward, which I think, like Rob pointed out, is shaping up to be a volatile one?
Yeah, I think we're not that far right now, but I do think that the $22 level is kind of key. If you look back over a long enough period of time, say about 10 years or so, it was overhead. It was downside support for a fair bit of time. Now it's kind of become overhead resistance. We need to, I think, get over that. We're not far. Can't say when, but we're close. So this is certainly encouraging. But once we get back above that and can hold that for a little while, I think it'll become again a new floor. And so I think that next year that becomes the floor. And from there, we could certainly see, much like Rob was saying, maybe I'm not saying necessarily on a daily basis, but it certainly wouldn't surprise me. The silver, if anything's volatile, silver is volatile. And so on the upside, 26, 27, to push 30 wouldn't surprise me. We were there 2.5 years ago. And given how things are going, and like I say, volatility, it would not surprise me to see silver touch 30 next year.
Well, that was even what the LBMA poll came up with in the $28 range. So with that said, question here from Keith, and Bill, will toss this one to you. When do you think the BRICS will move on their currency? They've been talking about it a lot. Obviously, we can't know for sure, but any thoughts on when we might see something like that?
I think you're actually seeing. I don't think the BRICS currency is going to be like a light switch. I think you're actually seeing the switch being moved, and in particular, just look at what Saudi Arabia has announced, and we believe they will announce shortly that they're going to formally join the BRICS. But basically what they're already talking about it publicly. So if they're talking about it publicly, all the behind the scenes, behind the curtain action basically has taken place. And then it's over for the dollar. So like I said, I don't think it's going to be a light switch type of move announcing the currency. I think it's happening in real time before your eyes right now.
Well, certainly has been, especially seeing earlier this year, temporary gold backing for the ruble. And Putin doesn't seem, whether people like him or not, as someone who just talks a lot and runs his mouth without having something behind it. So I think some good points that you have there, Bill. And Rob, we have a question for you. If perhaps FTX is a watershed moment for metals, especially if we see this spread to Binance and Tether. Obviously, there's been talk the last couple of years, has crypto investment taken away money that otherwise would have been in gold and silver? What would you say on that? Do you see a possible connection there?
Yeah, what's going on in the crypto space is not unlike what's going on in the gold space, to be honest with you. In gold, you have situations where you have a piece of metal that's owned several times over. Maybe it's leased, maybe it's rehypothecated, maybe, as with the Perth Mint, and what our investigation uncovered is customers bought metal and they lent it out to somebody else. And that happens in the gold industry all the time. And I think it happens in finance all the time as well. If you look at fractional reserve banking, and the entire financial system is built upon a set of core real assets and then derivatives and all sorts of leverage on top of it, most of which at the end of the day are not worth really anything. And so those core assets have multiple claims to them. That's what happens in the crypto sphere is you have these people loaning money. And in this particular case, the CEO lent money to his own hedge fund, took money and put it in risky assets. Well, I mean, he just did what a bank does. So the crypto guys are just being banks, but they're unregulated, I guess. And it doesn't surprise me. You look at Tether, that's a mess. We know it's a mess. They've never had a proper audit financially, and we know that they hold assets other than dollars. They hold a lot of Bitcoin, for example. So as Tether goes, Bitcoin could go, at least temporarily. And that's what a lot of that space is. And you see how the crypto complex has just really exploded, and how many different coins there are, and how many different financialization options and derivatives are being built on top of the coins themselves. That all crypto is right now is it's another overly financialized market. It's an overly leveraged, incestuous type of market, much like the banking system is. And congratulations to the crypto coin makers for doing that. You just created a second, Ponzi fiat system. Congrats. Could Bitcoin ever have? I do think it could as a legitimate currency. The problem is I don't think the governments around the world are going to want it to be. I think it's a competitor to the central bank digital currencies. But getting back to FTX, the existential threat to the crypto model is it decentralized? Sure. Can you run it without some of these centralized features, such as the exchanges, such as the Lightning Network and its ability to do transactions and to combine them, put them back on? See, everywhere along the crypto complex are points of failure or points of control, as I call them. And depending on who controls them, that's the way that they're going to go. They're not a completely it's not completely autonomous. People can screw with it, if you will. And so, and they can screw with it in a lot of ways. So until Bitcoin, the crypto complex, gets back to its original purpose, which is an independent, decentralized currency that's not controlled and it's not manipulated, and doesn't have issues with exchanges and doesn't have issues with cybersecurity and things like that, I think there's going to be a general lack of trust. I think that's what we saw this week in the cryptos is the sell-off. FTX really reminded people why it's still kind of the wild, wild west. And I won't say that it couldn't eventually grow into something that maybe even we all could come to appreciate, just because if it's a competitor to all these stupid government currencies. But for the most part, I think you're seeing the weaknesses in crypto. It's young. It's the wild, wild west out there. A lot of the people, there are a lot of promoters in that space, and a lot of people in that space are simply taking the playbook from the financial system. And you just have to be careful if you get in. That's all I'm going to say on that. Just be careful if you're in that space and playing in it.
Well, appreciate that, Rob. And Peter, question for you here. How do we get the mainstream media to start paying attention to the precious metals? And curious your thoughts. Obviously, probably the best way is to get a copy of The Great Silver Bull, Peter's fantastic book, How to Crush Inflation and Profit as the Dollar Dies. Although, Peter, aside from that, any other thoughts? What does it take before mainstream starts coming in? Is it a breach of that $30 level, or how do you see that?
It's hard to say what price, but I do think it's going to be a price move that will attract the attention. You need to see that first, and then you'll start to see people come into it. And obviously, some sort of crisis won't hurt. Like Rob and Bill were saying, that that could hurt the price initially, but then there's no doubt it'll bounce back. But I think the first and most important thing is going to be a significant price move, and that's going to draw a whole lot of attention. It did, when in the silver squeeze last year at the end of January. Something similar could happen. I'm not saying a call to action like that, but in fact, something that has more legs, because that was not a shock to the system. Some kind of a I guess a supply shock, which we could certainly be gearing up for if an exchange hits a wall and says we're only gonna, at this point, we're quote unquote changing the rules, and now you're going to have to take delivery. We're gonna settle in cash. That could be a kind of watershed moment. But again, just going back to sort of my first comment, which was that I think a significant price move will do it. I remember, this is years ago already, but say maybe 15 or more years ago, watching prices on Yahoo Finance and just tracking stock prices and going to their homepage. And eventually, it took a few years, but maybe I can't remember exactly, so nobody quote me on this, but maybe it was a few years into the gold bull market, which technically would have started in 2000 or 2001. A few years in, you started to see the price of gold permanently posted at the top of their homepage. And I remember thinking, gold has now arrived. People are actually following this. The mainstream knows that people are paying attention. That would have been obviously after multiple years of consistent gains in the price, and people want to know what gold's doing. And so at this point, gold and silver are still, showing up on their homepage. So that's a constant reminder. If I'm not saying mainstream investors are paying attention to it, but it's there. And if what will bring the media to it, it's absolutely a big price move.
Well, I would imagine we'll see a lot of clicking on that Kitco chart from the analysts as well as the people watching in the next year. And anyway, a lot of good points that you all mentioned there. And Bill, any final thoughts before we wrap up this panel on anything else that you're watching out for in 2023?
Well, yeah, I guess the one thing I would say is just do the best you can. We've not seen before, ever.
Well, it certainly does seem to be shaping up like that. And Rob, any last thoughts from you on what we'll see going forward next year?
Well, I think stick to your guns and don't be afraid when the volatility comes, because it will come. As we get to the end of this system, the beast, which is the financial beast that exists, is going to try to convince you to do all the things you probably shouldn't do to protect yourself. So just remember what you learned. Remember, all the stuff we talk about on our channels, all the stuff that you guys, the reasons why you're in. Don't let anybody shake you. There's going to be times in which you question your faith, you question all those things. But at the end of the day, if you've done your research and you're into gold and silver because you understand, what's likely to happen in the financial system, then you're ahead and you don't need to do anything else, and you don't need to worry about the choices that you made. So just keep your faith in it. No matter what happens, hold strong, stay strong. Don't let people shake you out of your conviction, and just do what you have to do to protect yourself. There's going to be a lot of volatility. There's going to be a lot of failed investments. You're going to see the stable coins erupt and collapse. You're going to see banks collapse. You're going to see countries default on their debt and things like that. So as we go through those stages, just hold your gold and silver. Don't give it up, and know that you're prepared, and do the best you can to help others around you. They may not listen to you and may think you're a crazy conspiracy theorist, or you're silly because you're buying this barbarous relic and you should get into the cryptos or go buy tech stocks. But at the end of the day, they're still your friends and family. Just appreciate them for who they are and help them out when the time comes, because you may be the only one that can.
Well, appreciate that, Rob. And Peter, any last thoughts or words of advice or wisdom as we head into 2023?
Well, I'm going to echo, I guess, a little bit of what Rob said. I agree on the volatility side, and people really should be cautious about letting that scare them. Like we said, gold can be volatile. Silver is a multiple of that. Don't let that scare you. It comes with the territory, and so it's volatile on the downside, but it's, as we know, extremely volatile, and certainly rewardingly volatile on the upside. And so, you've got to kind of keep the faith, take advantage of that. If there's a way that you can, benefit and take advantage of downside volatility to acquire more, that makes sense to me. And sit tight, because this is going to be a wild ride, but one that's going to go on for quite some time. And I think that it's not going to end until these metals prices are much, much, much higher. People just need to get on that bandwagon, so to speak, and stick with it. It'll certainly pay off.
Well, I think so. And what an exciting time. I know perhaps might be nerve-wracking from time to time, yet at least I appreciate all three of you, Peter, Bill, and Rob, because at least you're laying these things out. Bill, you've perhaps been doing this the longest, speaking out and laying these things out so that at least people would have some advance warning on some of the things coming. Perhaps not always the most cuddly things to think about, but just appreciate all of you. It seems like the audience is having a lot of fun. You got Dave Pranzler getting all giggly and riled up in the comment field as well. So, gentlemen, thank you so much for being a part of this year's SilverFest. Great to see you all again. And we'll be back here shortly with the retail silver panel in just a couple minutes.
Thank you, Chris.
Pleasure.
Well, thank you to Bill, Peter, and Rob for that forecast of 2023's silver market. Hope you found that helpful. And before we wrap up, would like to thank BlackRock Silver for bringing us today's video. BlackRock has been exploring its Tonopah West project in Nevada, where earlier this year they released a 42 million ounce maiden resource deposit. Since then, they've been doing some step-out drilling to the west, continuing to find more mineralization. Also, in the process of that, they've actually hit on some lithium mineralization as high as 1,217 parts per million lithium, in addition to the continuity of broad zones of mineralization up to 56.4 meters in thickness. So certainly a nice kicker to have on top of their gold and silver resource that they found. So you can find out more about that at blackrocksilver.com or just click on the video that is coming your way now.